Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and I'm going to give you two explanations today. I'm going to give you the standard party line, which is really what we've seen for the last 18 months or so. Then I'm going to give you what my gut is kind of telling me up here. Um, the standard party line is this: the bulls are the Bulls are in control at the end of the day here, and the Bears, the Bears had a couple of decent moments, but overall, the Bulls continue to control things. We're getting spikes higher. Um, the 56s weren't challenged yesterday, but we did do 51. We're above yesterday's high. Yesterday's high was 51. We have done as high as 52.5 in the Globex. I fully expect 56, no matter what happens today, I expect 56.75 to get challenged. Now I'm going to tell you, what I'm really thinking up here, which is this is difficult up here because the market is marching again at basically a 45-degree angle up with new highs in the last couple of days. That said, the upper band here is starting to get away from the bulls. It's up at 76.36. The Bears are making just about every day at two-sided day at least. And the spikes, when we go down and make these lows, even though 37 was a matching low, and 37 is a huge level, absolutely huge, was matching lows yesterday. Even though we made matching lows, which has been the death blow for the Bulls all through 2013. I mean, how many times did we see matching lows come and then the Bears just take 2 weeks off? And that may be what happened yesterday when we hit 37 the second time, because we bounced off that violently into the close and ended up doing about 10 handles off it. All that said, I think in the next couple of weeks we're going to be seeing kind of a consolidation up here in the 50s and a continued inability to get much higher than the 56.75. And what gets me leaning that way is the look of that 56.75 candle, the way the day played out, and the fact that we keep getting these violent moves off the bottom, which is not, those violent moves that we get are not necessarily bullish. I mean, you can call it price rejection off of a low, but you could also call it, short covering for something bigger. So I'm a little more bearish than I have been on highs in the last 6 to 9 months. And I'm going to continue to do what works, which is to buy dips until it stops working. But at the same time, I'm going to be mindful of the fact that we may be getting a little bit tired up here as part of the overall move. So that, that's not necessarily for today. That's for the next, couple of weeks, and we'll see how it plays out. And we'll talk through it every day as we go. The keys today are 56.75 on the upside, 37 on the downside. Inside day yesterday. So, and the way it's setting up in right here is setting up to test 56.75. The other thing I'm seeing now is instead of that consistent morning dip that gets bought, I'm seeing morning highs that are getting sold. That in and of itself gets me concerned about a sentiment change in the market. Okay, and a lot of this is left over from the move down, the one-day move down, and the move to 1817, which really didn't get completed. It kind of got prematurely, it ended very abruptly and prematurely on that news. And I still am not sure that the Bulls have what it takes to get up into the 1900s to 1925 from here, considering they didn't really work off much. And I think that's the concern when people get up into these high, mid 50 areas when you see the selling come. Took a long time to get through 46.5, and we keep trading back below it each day. So you don't want to see that today if you're a bull. You want to see it stay above 46.5. You want an entire day above 46.5. So I'm just going to trade what price does. But that's just an idea of what's going through my head as we head out in the next couple of weeks of trading. It's not just buy the dips, the bears are terrible, and we're going to keep going up forever. You know, that's worked for a long time. But we have to start to consider that the dynamic is changing a little bit. Okay, everybody have a fantastic day. Check us out on Twitter. Check out the website. Come in the chat room. Come trade this stuff with us. We were selling rallies yesterday very successfully, and had a lot of new people join yesterday. And come on in. We'd love to meet you and see if we can help you with your trading. I think you'll like what you see. And I will be back tomorrow morning with another webcast. Train them well, everybody.